Good morning. It's Friday, March 27th, and here's what's on the agenda. President Trump extends the energy attack pause again. Oil drops and the stock sell-off eases. And central bankers voice growing concern over the war's economic fallout.
Oil has actually turned higher, up 0.2%, closing in on $109 a barrel, above 108 right now, on question marks about what this time frame change means for President Trump and the Iranian reaction. European futures then pointing to modest gains of 0.3% after dropping more than 1% yesterday. Energy was a sector in positive territory yesterday. It was basic resources and tech that was under pressure for Europe. Today, though, modest upside being flagged by the futures. Japanese JGBs, look at the sell-off there, particularly on the 10s and the 30s. A pronounced sell-off in inflation risks for Japan and expectations that maybe the BOJ has to go earlier than some in the markets expect. Yields jumping almost 18 basis points higher on the 30-year at 370. The countdown to the opening trade starts right now.
Welcome to Friday, everybody. We're nearly at the weekend, but we are going towards the weekend with a bit of optimism, at least when it comes to the futures picture on both sides of the Atlantic. Tom, you mentioned that oil is just higher now on Brent. It's lower still on WTI, but it, of course, comes back to the geopolitics in the Middle East and President Trump extending his deadline for Iran to strike a deal with the US or face more attacks. Again, this is the second extension since Saturday's threat. And the market, it seems, futures, choosing to focus more on that than the Wall Street Journal's report that the Defense Department in the US is still considering sending as many as 10,000 troops to the Middle East on top of the thousands already in the region.
And both of those stories point to how this could play out in two very different directions. And that is the challenge for the markets, who should and still seem to be laser focused on the timeline. So push to April the 6th. Is that then a signal that this is a Trump administration determined to get some kind of deal? Or is it, in fact, a Trump administration that's giving itself time to build out those military assets, 10,000 additional troops on top of the 5,000 Marines and 1,000 of the 82nd Airborne that are in station and getting close to the Middle East? And those seem to be the two different directions that markets have to contend with. Is this a Trump administration buying itself time, or is this an administration determined, it seems, to try to give the Iranians some space, some time to come back with a deal that maybe the two sides can land on?
Yeah, and that's the military side. President Trump says that the talks are going well on the diplomatic side. It's not clear who the US is talking to. Trump claiming that Iranian negotiators asked for 7 days and he gave them 10. The Wall Street Journal reporting that the Iranians were still actually considering how to even proceed with the negotiations. And you had the Tasnim news agency out of Iran indicating that Tehran's still waiting for a response to its own conditions, including an end to a war on all fronts, which likely means Israel's parallel war on Hezbollah in Lebanon.
We have to focus on what's actually happening on the ground as well, and particularly, of course, on the Straits of Hormuz. The UAE coming out, and there are reports that the UAE is in discussions with other regional partners to put together a maritime force once there is more stability in the region to open up the Straits of Hormuz. We've had reporting that the UAE, that the Saudis are closer to thinking about their own military action. But the news today from the UAE is they are considering being part of a maritime alliance to support the opening of the Straits of Hormuz. But when the conditions are right, we're not there yet. France is making similar moves as well. So we could get to a point where there is an international alliance to reopen, but that seems to be only coming if we can get a cease in terms of hostilities that would allow that to happen.
And indeed, US Treasury Secretary Scott Bessent saying that a US insurance program to try and boost shipping through the Strait of Hormuz is going to start soon. Trump saying that Iran's allowed 10 boats of oil to sail through the strait as a goodwill gesture. We were wondering what that present was. This, it seems to be what it is. So we talked about the oil impact. Brent now at $108 a barrel, up 0.4%. But we've got to talk about the broader market reaction as well.
Yeah, so to your point, oil prices high, WTI now pushing higher as well. Macquarie putting out a note suggesting that if this conflict continues into June, you could be looking at $200 a barrel. That would be a record high, of course, for oil. That, the view from Macquarie in terms of projection into June. How do you trade this then? The markets for many have still seen, and equity markets, relatively resilient. Is it complacency? Is it resilience? Interestingly, in terms of some dynamics that's come through in the last few trading sessions, if you look at the 60-40 mix and that balance, that classic balance for your portfolio, the worst month since 2022 on these inflation concerns. So 60-40 is not working for you. And in terms of the other dynamic that's come through this week, interestingly, is through the week you've seen oil lower and equities lower at the same time. So oil is actually lower this week, equities lower as well. Of course, across the month, oil is still up more than 40%.
OK, well, we're looking at futures higher, as I say, on both sides of the Atlantic. We're up 0.4%, both for Euro Stoxx 50 futures and S&P E-minis. It's always difficult positioning into the weekend because if history teaches us anything recently, it's that a lot can happen over the weekend. So do you want to be piling on risk going into it?
It's also worth noting what happened in tech yesterday. So some pressure on Mag 7, its worst month since October. You saw pressure on Meta, you saw pressure on Alphabet. Part of that was linked to this court case that found them liable for the mental health crisis for a young lady. Broad implications from that story, but also sentiment reduced in terms of the AI trade. So that is worth noting as well. Tech was under pressure. The Nasdaq 100 closed lower by 2.4% yesterday.
Now, in your market check, you flagged the long end of the JGB curve, higher yields, particularly on the 30 and 40 years, on this expectation of a hike, but also that coming back to Japan's exposure to the Middle East energy market. We've got to talk about central banks in general. We've had a lot of commentary over the past 24 hours, central bankers growing in concerns about the economic impact of the war. We had a raft of Fed speakers yesterday. I'll just call out a few of them. Lisa Cook saying that the inflation risk is greater with the labour market only precariously in balance. Michael Barr saying it's making sense to assess conditions. And Philip Jefferson saying he wants to monitor the higher costs if they get embedded in prices. But we also had that OECD outlook. They sharply increased their inflation forecast for major economies. And indeed, they say that Britain is going to suffer a bigger growth hit than any other G7 nation. Inflation picking up and rate cuts to be abandoned.
And to that point, BOE speakers yesterday seeming to diverge from what we're hearing from the ECB and Fed speakers generally. Interestingly, in terms of the ECB, just worth noting that Christine Lagarde has been speaking to The Economist. This line stood out to me. This quote to The Economist from Christine Lagarde: "We are facing a real shock that is probably beyond what we can imagine at the moment." A pretty stark assessment from the ECB head, of course. But to the point around BOE voices diverging from the ECB and the Fed, interesting to hear from Deputy Governor Sarah Breeden saying that there is a lower risk of second-round effects this time round for the UK than 2022. And part of that is down to the broadly weaker fundamentals underpinning this UK economy right now versus the picture in 2022, the ability for the consumer, for example, to spend, the ability for the government to step in with stimulus to cover some of these energy price pressures. And so that divergence is interesting in terms of what we've been hearing from central bankers.
Yeah, and that sentiment echoed by Alan Taylor and Megan Green at the BOE as well. Just in terms of the economic picture here in the UK, we've got some breaking data in the form of retail sales coming in lower than expected in February, falling by 0.4%, including fuel, and by 0.4% if you exclude it. So economists had predicted 0.7% and 1% declines respectively. Very little reaction, in fact, to this data, which, like so much covering February, really has been made somewhat irrelevant by the implications of the war. So the pound about flat for the day, but that being driven more by the move in the dollar.
Yeah, 133 right now on the pound, largely unchanged on the back of that data, to your point. Let's tell you what else is coming up today on the show. James Meadway, Verdant founder, is going to be coming up to view and give us some details in terms of how the Green Party here in the UK is thinking about possibly trying to win over the bond markets. Fabiana Fideli, M&G Investments, Equities and Multi-Asset CIO, on how to position around all the volatility and uncertainty emanating from the Middle East. And Dex Hunter-Torricke, Centre for Tomorrow, founder and president, formerly working at the likes of Google, Alphabet and with Elon Musk as well. So an important voice in terms of what's happening in terms of tech and AI.
Let's take a look at what else we're watching throughout the day. We have Marco Rubio attending the G7 foreign ministers meeting later on. We'll be watching out for the arrivals. Then later we get BYD earnings, and at 2 p.m. London time, the University of Michigan sentiment data, and then more Fed speak. We get to hear from Thomas Barkin, Anna Paulson and Mary Daly before finally at 9:30 p.m. London time, President Trump will be delivering a special address at FII Miami's summit.
Here's what else you need to know this morning. The US Senate passing legislation to fund most of the Department of Homeland Security, forging a path to end a lengthy partial government shutdown that hit airport security and threatened to ripple through an economy already roiled by the Iran war. The bill, which must still pass the House and be signed by President Trump, marks an abrupt reversal for Republicans who had blocked similar proposals backed by Democrats to partially fund the department for weeks. Bloomberg understands that Pernod-Ricard is exploring a potential acquisition of Brown-Forman, the owner of Jack Daniel's whiskey. Sources say the French beverages company has held some initial discussions with Brown-Forman about a potential combination. Brown-Forman shares jumped sharply on the news, giving the company a market value of $11.8 billion. Pernod closed down 5.7% in Paris for a market cap of just north of $17 billion. And Bloomberg understands Anthropic is considering going public as soon as October. Sources say the maker of the popular Claude chatbot has held early discussions with Wall Street banks about taking leading roles on a potential listing. Anthropic has been boosted by a win in court, with a judge blocking a Trump administration ban on government use of its AI tech. The company sued earlier this month to block a declaration by the Defense Department that Anthropic posed a threat to the US supply chain, escalating a high-stakes dispute over safeguards on AI technology used by the military. So a potential mega IPO from Anthropic that has gone, despite that political and it is political and legal challenge from the Department of Defense in the US, has gone from strength to strength in terms of the products it's putting out and all the additional capabilities, to the point, of course, where we've seen market volatility on the back of Anthropic news. But this is a company that is leading, particularly when it comes to enterprise, and we'll see how well react, or what the response is to this potential IPO. The assumption is there's going to be massive demand to get exposure to Anthropic if they are listing in October this year.
Arguably, this court case has now put the wind in their sails now that they've won. Interesting that the pitch for Anthropic is that it's more responsible as a steward of AI than competitors. I'm interested why that is, really, how that manifests. But notable that so many of the founders of OpenAI, the original staffers of Anthropic, came from OpenAI, including the CEO.
And that's the genesis of that safer, quote unquote, safer large language model that they are pursuing. Is they split off from OpenAI because their view was that OpenAI at that point wasn't taking safety seriously enough. OpenAI, of course, would make the contention that they absolutely do. They have systems in place. But certainly it's been part of the branding, at the very least, for Anthropic. And certainly they seem to have won big enterprise clients largely on the back of that. The strength of their models, but also that focus on safety and reliability.
Yeah, healthcare and finance as well. Well, coming up on the opening trade today, we have the EU's top diplomat saying Europe's discussing how it can help with efforts to keep open the Strait of Hormuz. We'll bring you some of that interview with Kallas later on in the show. Plus, we'll go live to France as US Secretary of State Marco Rubio arrives for a high-stakes meeting with G7 foreign ministers. But up next, we're going to be speaking to Hugh Gimber, global market strategist at JP Morgan Asset Management. And if you've got any questions of your own for any of our guests, please do send them to us on IB+BB TV Go. Good morning from London. This is Bloomberg.
I gave them a 10-day period. They asked for 7. You're going to say, oh, Trump's a terrible negotiator. They asked for 7, and I said, I'm going to give you 10, because they gave me ships. We talked about the 8 ships, the president that I talked about the other day. But they asked for 7, and I gave them 10. You got 10 days, and they were very thankful about that.
Donald Trump speaking to Fox News. The US president has once again pushed back the deadline for Iran to make a deal or face more attacks on its energy sites. The Wall Street Journal reporting that Tehran had not sought a pause in strikes. Let's bring in Bloomberg Horizons anchor Jumana Pasechi in Dubai. Jumana, the extension then allowing time for more talks, arguably allowing more time for a military build-up and troops in the region as well. What is your assessment of how things are unfolding right now?
Yeah, well, we got a flurry of headlines coming from President Trump himself, indeed, after a very long cabinet meeting. I would say the main takeaway is that he has pushed back that deadline by 10 days to April 6th. He's given a bigger window, a longer window for the two sides to come together, potentially for discussions. But I will just reiterate, there has not been a lot of progress in terms of the state of those negotiations in the last 24 hours. And the Wall Street Journal are reporting that actually Iran never requested an extension to that deadline, and they have yet to give their formal response to the 15-point proposal that the U.S. put forward. Now, again, a lot of this is rhetoric, but what we do know is that there are no physical meetings that have been decided on yet, and Pakistan have been put forward as a key mediator in that regard, but nothing has been confirmed. And yet the language that continues to come out of Iran is one of defiance. They seem to not be in the mood of compromising and continue to strike back. So this is day 27 of the war. It's essentially been going on for a month now, and we continue to see these strikes and counterstrikes, IDF continuing with their intensity on strikes over Tehran and other parts of Iran overnight, taking out a key missile launching facility, they say. In retaliation, once again, sirens went off in Bahrain. We've heard of more drones being intercepted in Saudi Arabia. Over here in the UAE, also missile interceptions. So the war is still very much going on. I also just want to remind everyone that, and this is something that we've been reporting on throughout the course of the week, there are extra Marines and troops being deployed to the region as we speak. And we spoke about 2 Marine expeditionary units. They're making their way over. As we understand, the first group should be arriving within the next few days. There were also reports that the Pentagon are looking to mobilize their 82nd Airborne Force. This is a special force unit that could be deployed on very short notice. And they're typically used as a tool of deterrence. And so to come back to your original framing, Tom, the question here is whether President Trump is actually genuinely giving time in order for these negotiations to take place, or whether it is a time-buying exercise to allow for the military deployment and for the new assets to arrive to the region.
Jomana, thank you for the update. That's been Jomana Basechi in Dubai. Well, joining us now for the market impact is Hugh Gimber, global market strategist at JP Morgan Asset Management. Hugh, we are seeing relief when it comes to the futures picture this morning on both sides of the Atlantic, but oil's higher as well. Should markets really be relieved by this extension of Trump's deadline?
For me, this is yet more confirmation that the pressure on many parties within this conflict to find an off-ramp is only going up. We've seen it with market pressure coming yesterday, but really I think the US is focused on the level of the S&P 500, the level of oil prices, the level of gas prices, all of those really, really important determinants going into the midterm elections in November. So the pressure here to find some form of off-ramp specifically focused on restoring, perhaps limited, but restoring energy supply through the Strait of Hormuz is really, I think, what the actions overnight demonstrate. For me here, the challenge for markets is we can tell you exactly how markets are going to trade based on where the oil price is. You know where the trades would be. If we see de-escalation, it would be weak for the dollar. It would be positive for emerging markets. It would be positive for Japan. It would be taking out some of those rate cuts. But you're left facing this situation where you know the playbook, but no one has clarity on exactly where oil prices are going to be, which is where we're trying to really drill down into where this is emphasizing the long-term themes that were already in play prior to this conflict.
Well, what happens if you get to oil at $200 a barrel? That's what Macquarie is saying. That's the number that Trump officials are plugging into their economic models as an extreme scenario. Where does that leave markets?
Yeah, I mean, that would be a negative scenario for the global economy, very clearly. But that is exactly why I think it would be a recession at $200 a barrel. But that is why we're seeing such focus on finding an off-ramp. And I don't know how this comes. I don't know whether it's through successful negotiations. I don't know whether it's about more NATO members starting to get involved and thinking about safe passage of those ships. But we're still working on a base case where energy supply in 4 weeks' time is going to be above where it stands today. And that's how markets are pricing this as well. When you look at some of the longer-term energy contracts, I think there are many risks in multiple directions, but that restoration of energy supply is key for multiple parties, including Asia. Think about the pressure China's going to be applying over the next 10 days on Iran to try and make sure that at least there is some flow of supply coming through the Strait.
Can we just play out one scenario, and that's the scenario that we get a military build-up. I'm seeing that in terms of military assets and members of the military, in terms of 82nd Airborne and Marines, that they get deployed on Iranian territory. In that scenario, What is the strategy? How do you across equity markets play that event?
So for me here, you're very, very cold-hearted, and you say, actually, the scenario is about the flow of oil. You don't think about where there are troops being involved. For me, if you give me a scenario where there are troops on the ground and there's oil flowing through the Strait of Hormuz, then I can start to work this through. We're thinking very much about de-escalation in terms of an oil price based on energy supply. We're thinking maybe base case, partial de-escalation, some resumption of supply, but oil price is still embedding a higher risk premium than prior to this shock. The full flow back, quick return of oil at a quicker deal, it's all about the release of energy, which is how you get to the economic impact.
How are you rethinking your earnings expectations at this point, Hugh?
So at the moment, we are not making major changes because obviously you have to think as well about earnings being a nominal issue. And so it's about different companies' ability to pass on some of the higher costs. We're also thinking through the government response, which for me is one of the key unknowns here because we've seen in prior shocks the pressure on governments to step in and shield both consumers and corporates is enormous. And we've already had examples of Japan, of Italy. We've got pressure on many other countries here for governments to be the one to take the brunt of this shock. And if that's repeated, then the corporate sector and the earnings outlook is going to be much more resilient.
I know the UK wasn't on that list. Is that because the UK just doesn't have the fiscal space? We've got yields higher already.
So the UK has less fiscal space, but when I look at the move in bond markets, you think through the job of the central banks here. Their job is to anchor long-term inflation expectations. They can't change the supply of oil, but they can guarantee to talk tough when it comes to tackling inflation. And for me, that's exactly what they did at recent meetings. Whether it's the Fed, whether it's the ECB or the Bank of England, the message was, we've got a grip on this. We're not going to repeat the same mistakes of 2022. The question I'm then asking is, OK, you're talking tough, but can we really see 75 basis points of hikes delivered this year? I'm much less convinced. You heard it from several Bank of England members yesterday. Markets are thinking about this today in terms of an inflation shock, but we also have to think about the pressure on growth that would come at a later date. And so that, for me, is where maybe the bond market is listening to that really hawkish tone, but perhaps translating a little too much of that language into intended action.
So fiscal stimulus seems to be being priced in by the bond markets, maybe being priced in too much, to your point. How much is priced in across the equity markets in terms of the potential fiscal support that could come through?
So the equity market is still looking at this shock, I think, in a relatively optimistic fashion. The equity market is taking its cue from the energy markets, which is to say that this is significant disruption, that there is a hit to supply over the medium term, but that ultimately this situation is improving. That partial de-escalation base case that I laid out in terms of, let's say, oil at $100 a barrel to the middle of this year and then moving back to somewhere in the region of $90 by year end.
Is that a complacent reaction function that we're seeing from the equity markets?
I think it's a reaction function that reflects the pressure on all sides to find de-escalation. I do not think equity markets here are pricing in multiple quarters of significant supply disruption, but I think you can understand that when I come back to those incentives. I spoke about the US earlier, but you think through this through the Asian lens. This is where I think the pressure on Iran, and maybe that's what those 10 days are buying here, more time for countries like China, like India, like Pakistan to be coming to Iran and saying, look, this is hitting us really, really hard, and therefore can we find some trickle through of oil? And perhaps that's the next step, where we see more tankers going only to Iranian allies. But again, through my framework, that is a positive step forward in terms of improving the supply of oil.
All right, Hugh, thank you for your analysis. As always, Hugh Gimbert, Global Market Strategist at JP Morgan Asset Management. And coming up, we'll discuss whether the Green Party here in the UK can provide the economic framework for government. Up next, we'll speak to James Medway, the founder of green think tank Verdant. This is Bloomberg.
Welcome back. Happy Friday. We are 30 minutes from the start of the opening trade. European futures are losing momentum, pointing higher by just 0.1%. That's in the context of a drop of more than 1% by the close yesterday. There's a lack of conviction. There's that continued uncertainty, of course, emanating from the Middle East. So that's the picture across the benchmark European Stocks 50 futures. Here in the UK, FTSE 100 futures pointing to very modest gains of 25 points. CAC 40 futures over in France are currently flat. Lizzy.
Well, in your bond space, not much doing this morning, really across the curve, across the continent. Even in the US, Treasury yields pretty steady. Where the action is at the long end of the Japanese curve, and you've still got the 30-year yield up 17 basis points, the 40-year up 19 basis points on the expectation of a hike, and because Japan is just so exposed to energy coming from the Strait of Hormuz. Well, we're still waiting, of course, for the gilt market open, but let's turn to the UK now. The leader of the UK's Green Party, Zach Polanski, says government shouldn't be, quote, strangling business, tempering his left-wing bloc's economic message ahead of the nationwide local elections in May. Verdant, a new economic think tank, aims to provide progressive policy ideas suited to adoption by left-of-centre parties such as the Greens. And its founder, James Meadway, I'm pleased to say, joins us now in studio. James, thank you for making time for us. We've heard lots of comments on the left about not being in hock to the bond market, some of that being walked back more recently as we approach elections notably. Do you think that it's important that left-wing parties are aware of the bond market, that they tell a story that bond markets can believe in?
Well, it's not just being aware of the bond markets. It's like whether you're aware or not, the thing is still there. And if you're a country like Britain with this sort of extraordinarily large, for a developed country, international exposure, the 40% of food that we import, the 50% of the natural gas that we have to buy from the rest of the world, the 60% of fertiliser, the third of government debt owed to the rest of the world. It's a very, very big international exposure. So what happens internationally translates very rapidly into what people feel in their pockets. And that's the exposure that you have to think about. It's no good saying the bond market will just disappear if we kind of print enough money or we borrow enough. It really doesn't matter. That's actually not going to be true for a country like Britain. And that's a hard constraint on what any government can do, unfortunately.
And so many governments have learned, right, over the years recently. But then it becomes a question of how are you radical? How do you come up with radical ideas to boost economic growth, but also keep it realistic when it comes to pleasing the bond vigilantes?
Well, there's two bits to this. First is that we shouldn't mistake radicalism for a kind of fiscal radicalism. There's no necessary need to think that if you want to do something interesting in the economy, it's all about how much you spend, how much you borrow, and that's the end of it. I think for too long, especially on the left, you can fall into a bit of a trap of going, well, if we just spend more, then that makes us even more radical than someone who's spending less, and that's all we have to think about. Actually, the situation we're in now, particularly in Britain, I would say, is that we have deep institutional failings right the way across the piece. I don't think the Treasury is a particularly functional institution. I don't think the way the Bank of England sees its role as controlling inflation, but we're being hit by massive external shocks over which the interest rate has no impact. You know, the Bank of England can put up the interest rate here, the base rate can go up, the Strait of Hormuz will stay shut, right? So it doesn't really work. We have to rethink the institutions, and that's where the radicalism comes in. And that, I think, is where there's some potential that you see with the rise of the Greens over the last 6 months with Zach Polanski as the leader. There's some potential to take that desire for a change and turn it into an institutional shift of the sort that we really need to get the country moving again.
Have you convinced him, though? I'm not seeing much evidence, if I look at the Green Party or the Labour Party, on the left of the Labour Party, that those members of Parliament, or indeed the Green Party, really do understand the functioning of the gilt market, really do understand just to what extent we are held in the grip of this bond market. Well, and the fact that additional spending is going to cause a significant problem. We are incredibly vulnerable, and gilt markets have shown that consistently.
You can do additional spending if you have the additional taxes without very much problems there. Now, you can argue about who should be paying the taxes and how much tax you can get, and that, I think, is an important...
So what's your prescription on tax? I mean, you think, is a wealth tax something that you're pushing?
I think the wealth taxes...
What are examples of wealth taxes that work? And if there are, give me one.
Well, Norway, for instance. I mean, Switzerland, yes, it works very well. I mean, they increased it over the last year and got more money in. I mean, what more do you want from a tax from that point of view? Switzerland has had a wealth tax for about 200 years now.
How would your wealth tax work? How would you encourage and incentivise innovation? We need entrepreneurs to innovate and build companies. How do you keep those people here whilst threatening higher taxes, wealth taxes?
Well, what you've seen, for example, in Norway is that, of course, a few people leave and a few people make that decision that once you've increased the tax, that's it for me, I'm off. But actually, most people don't do that. They're attached to this country for all sorts of reasons. If you're building a business here, if you have all sorts of social relationships here, if your kids are going to school here, you don't just up sticks and go somewhere else. And also, let's be a bit more realistic about where entrepreneurialism comes from. It's not necessarily right at the top. I mean, this is one of the things I think Zach Polanski Zelensky and the Greens in general have been quite good at is talking about what happens to our smaller businesses, what happens to the people who aren't going to be millionaires and billionaires and everything into the distance somewhere. What are we doing about what's happening on our high streets? What are we doing about the quality of people's lives? That's not a big picture question.
What about tech entrepreneurs? I don't hear him talking about that.
Of course,
of course they are.
And one creates jobs, which leads to wages for the other.
This isn't what's happening. This is part of the problem. This is why you're seeing this populist upsurge everywhere. You have, for example, this government heavily focused on let's build whacking great data centres everywhere. How many jobs is a huge hyperscale data centre in the northeast of England going to create for anyone in the northeast of England, right? How many jobs is that going to create? At enormous expense, by the way, in terms of the energy costs, the water costs. There's a real disconnect that's appeared. So if we're sitting there going, oh, let's get the billionaires, let's treat them nicely so they'll create jobs for everyone else, that's not happening and people can see it.
So if AI displaces jobs, what's your answer? Universal basic income?
Well, I would like to see a basic income, and it's part of a Green Party policy, for example, and I think there's a solid argument for saying, regardless of what happens with AI, a basic income would be a good idea.
We've already got a problem with benefits and how to afford it, so surely that just adds to this tax and spend balance problem.
I think there's decent costed proposals out there. There have been for a number of years. People like the economist Howard Reid a couple of years ago with a plan to reform the benefits system by introducing basic income, and I think that's how you'd have to treat it. Not just like, here's a load more money, but here's how we're going to get the benefits system to actually work, because it's really failing all sorts of people in all sorts of ways at the minute. Introduce something simple, clear, consistent, basic income, and that way the whole thing can work a lot better.
People don't just need a basic, they need a job. They need a job. And you've got how many people, is it 9-10 million people right now of working age who are not participating in the UK labour market?
Particularly young people.
How do you fix that if it doesn't involve cutting benefits?
Well, I'm sorry, I'm trying to understand the link between you're going to get your benefits cut and that's going to magically create a job. That isn't how this thing is going to work. I mean, part of the issue that you're seeing with unemployment and pockets of unemployment is a problem of demand, and is a problem of demand in local economies. That we have an extraordinary focus, still with this government too, to be honest, when it talks about what is its plan for growth. It says, well, let's expand Heathrow, let's make a Silicon Valley in Oxford. OK, everything's in the southeast forevermore, everything's in London forevermore. That's no good if you're in the northeast of England, or where I'm from, in Wigan. It doesn't do anything for people there. You've got to get the demand back into these local economies. That means some spending, some investment has to take place there. That's how you're going to start to create jobs.
James, we haven't got long with you, so I do want to focus on your response to the current situation in the Middle East. You said at Verdant's launch on Wednesday that you think Rachel Reeves' response to the energy price spike has been totally inadequate. What would you like to see? And really, should the state be stepping in every time we see higher energy bills?
Well, the issue we've got at the minute is that, look, take the last just 6 years now. We've had 3 major shocks. Coronavirus, the Ukraine war, and now this Iran war that's just taken place. We keep getting hit by these things. And every time,
the bill keeps rising.
Exactly, and every time you get this response where, oh, it's an emergency, and you scrabble around and you try and prepare everything. We know what the longer-term part of the solution is, particularly to energy shocks. It has to be domestically produced renewables, but that takes a long time to kick in. What we need to do now is think about how best to protect households. Now, I would favour something like a block tariff, where you say, OK, this is the allocation that's protected, and if you use more than that, then you're facing a higher marginal cost. So that way, you don't have just subsidies for people with very large houses, very wealthy people, that sort of thing. The government isn't talking about doing that. They're talking about narrowly focusing on a few people already in receipt of benefits, and then leaving a whole load of other people not in receipt of those benefits to face that exposure. That isn't adequate.
James, thank you very much indeed
for
your time. James Meadway, founder of the think tank Verdant. Coming up, mixing drinks on a Friday. Pernod-Ricard confirms they are in talks to merge with Brown-Forman, the owners of Jack Daniel's whiskey. More on that and other stocks to watch at the European Market Open. It's coming up. This is Bloomberg.
What we are discussing is that what we can do to keep the Strait of Hormuz open, and there, we have our own operations, but we are also discussing whether there could be a joint coalition of the willing to really keep this the strait open. But right now, no naval vessels really sending to the.
Kallas, the EU's top diplomat, speaking to Bloomberg at a meeting of G7 foreign ministers in France on Thursday. Bloomberg's chief Europe correspondent, Oliver Crook, is on the ground at those G7 talks in Vaux-de-Cernay. Ollie, Kallas talking about a coalition of the willing. Meanwhile, Marco Rubio, of course, Secretary of State of the US, said it's in the G7's interest to help the US with the Strait of Hormuz. What are the latest developments on this? What are you hearing on the ground at this G7?
Yeah, so what we understand is Marco Rubio arrived here late last night at about 2 a.m. He should be arriving here any moment now to have bilateral meetings and, of course, a large sort of meeting and a gathering of G7 foreign ministers. Will also include the Saudis of particular interest at this moment in time. For Marco Rubio, this is really going to be an effort to try to enlist some of the G7 allies in the war in Iran in some capacity or another. We know there's been very limited appetite for there to be any sort of kinetic or active military involvement by any of the G7 allies, and that's really been echoed by everybody I've spoken to, whether it's Kallas, whether it's the Canadian foreign minister we spoke to yesterday. They're not really have the appetite to get involved in this war. That being said, there are discussions, we understand, behind the scenes about building out this coalition of the willing. According to Mark Rutte, who spoke yesterday, the NATO Secretary General, there are about more than 30 countries that are willing in some way to get involved. Now, we should say we're not clear on what these nations are willing to do and the timeline in which they're willing to do it. Of course, many of the comments we've heard from, for example, Emmanuel Macron, is it would be the day after the war. And in the moment, we're still very much at the day of. The other issue for the European foreign ministers, of course, for Marco Rubio, is try to get him on side and keep him on side on Ukraine.
And Ollie, Bloomberg Economics is writing this morning that the war in Iran has been a, quote, gift for Moscow, given the surge in energy prices. Do you think that the US is going to use support for Ukraine as leverage over the G7 on Iran?
So what's really very interesting is I think you have this dual dynamic where I think on the one hand, maybe the Europeans can offer something in order to guarantee that sort of support from the United States. But of course, the United States has been fairly unreliable in its commitments over the last year or so. So it'd be hard to really get that guarantee from there. That being said, what we got from Trump yesterday out on Truth Social saying that NATO nations have done absolutely nothing to help with the lunatic nation now militarily decimated of Iran. The USA needs nothing from NATO, but never forget this very important moment in time. A few minutes later, he put out an article that suggested that the Ukrainians had potentially had an idea of putting funding towards the Biden campaign. So whether or not these things are true or sort of irrelevant, it gives you a sort of opening into the frame of mind of the President of the United States going into this meeting. And before boarding the plane last night, Marco Rubio said a couple of leaders in Europe who said that this is not Europe's war, he's referring to Iran. Well, Ukraine is not America's war, and yet we contribute more than any other to that fight, any other country in the world. So that's something to examine for the President of the United States and to take into account down the road. So, of course, for the Europeans, they will try to make the argument that actually the war in Iran makes very clear that the Russians are on the other side of the United States because of the intel sharing, because of the potential drone deliveries to Iran. And that's precisely the point that Kallas made yesterday here.
Ollie, thanks for the update. Bloomberg's chief Europe correspondent Oliver Crook there reporting from France ahead of those foreign ministers arriving. Well, joining us now is Bloomberg's executive editor for Asia markets, Paul Dobson, with the markets in 3 minutes. Morning, Paul. Looking at the futures picture, pretty optimistic heading into the weekend. How are markets in general setting up for the time when we always seem to get the most news?
Yes, hi Lizzie, that's right. It does seem that a lot of the action takes place at the weekend. Feel some sympathy for the Asia colleagues. We're the first responders in the market sense, at least when we get in looking at what's going to happen. I think positioning is so crucial at the moment. It's very, very interesting because although investors are very aware of the negative impact that the war is going to have on the global economy and the adverse impact on inflation from very high oil prices, at the same time, people are keeping in the back of their heads that if there is some kind of a deal and a resolution and the Strait of Hormuz is reopened, then markets would move very sharply in the opposite direction. We were looking yesterday at a similar sort of parallel that we saw post what Trump called the Liberation Day, where he introduced his tariffs. And as soon as he started to relent, the S&P rallied nearly 10% in a single day. That kind of a scale of a move is the sort of thing that investors don't want to get caught out by. So you sort of see this kind of trying to hold both of those thoughts in their heads at the same time. I think we dribbled lower, but people now are factoring in the risk of an upside surprise over each weekend, as well as the possibility that things deteriorate.
Paul, we're almost a month into this war. What for you are some of the key market takeaways as we look back on that 4 weeks, the energy shock and the inflation impulse?
Yeah, it's been very interesting, hasn't it, the market response? We've got this handy widget on the homepage of Bloomberg.com that gives you some idea of what's going on. Obviously, big rally in crude oil, up nearly 50%, and European natural gas prices. Likewise, the worst month for stocks in about 3 years on a global basis as well. And what I think is really telling here is a 50 basis point move up in the 10-year US yield shows you that bonds are no refuge in such an inflationary or stagflationary environment. We've seen another big move in Japanese government bonds today as well. Very high increases in 30 and 40-year yields there. What you can see from that map is gold also not a haven, but the dollar really outperforming the place where people are scurrying to put their cash, up more than 2.4% so far since the war broke out. So that's a little bit of a overview of the markets.
And what, apart from the dollar, has shown resilience? Not gold, of course, but where else have we seen it, Paul?
No, so what do you think is one thing that's interesting is China has performed pretty strongly in among all this. Most of the rest of the world is worried about how inflation is going to be much higher. China was stuck with deflation, so now it's managing to sort of profit from this a little bit. So we're seeing companies raising their prices, asserting some pricing power, and the market responding positively to that. So that's one ray of light there in global markets.
Bloomberg Executive Editor for Asia Markets, Paul Dobson. Paul, thank you. Have a great weekend. Remember, you can get up-to-date analysis and insights. Just go to MLIV Go on your Bloomberg terminal. Let's get your stocks to watch now with Bloomberg's Louise Moon. Louise.
Good morning, Tom. This morning, starting off with a bit of a Friday story. So we've got Pernod-Ricard in talks to merge with US company Brown-Forman. Two huge alcohol companies. It would bring together two family-owned businesses if these talks do result in a deal. So in that sense, quite an attractive deal for them both. You can see both of their shares are down quite heavily over the past year. That's as consumer demand change, alcohol, a weaker demand from alcohol, particularly from China. And now, after news of this potential deal came through, Brown-Forman shares really surged in America on the back of that news. So investors, welcoming that potential deal. So we'll be looking out for the reaction on the European side this morning as trading opens. Next up, another deal is Novartis. They've announced they've bought a company called Excellergy. Now, this is a biotech firm that's for about $2 billion US. This is all part of Novartis trying to, again, strengthen their business. They're moving into new products, things like immunology, which Excellergy specializes in. And, this comes on top of they're moving into cancer drugs as well as that. This is as their best-selling drugs kind of age, and they're trying to really bolster their business. Now, they have risen about 9% year to date, beating the likes of AstraZeneca, Sanofi. So they have, beaten their peers in that sense, but they're really trying to strengthen that business and boost things going forward via that deal. That's expected to close in the second half of this year. And finally, Santander, a positive story from them this morning. Their chair is expecting better profitability for the full year ahead. Now, you can see their shares so far in the year to date are down, but slightly outperforming the banks index in Europe. Over kind of the longer period, their profitability has surged, so she's expecting this to continue and this streak to continue, which will hopefully kind of boost shares at the open and then going forward.
OK. Louise Moon, thank you very much for those stocks to watch. 8 minutes away from the market open here in Europe. Looking broadly at the futures picture, we are pointing higher in Europe. We're up 0.2% on Euro Stoxx 50 futures. Interesting that FTSE 100 futures are only up a little more by 0.3% when we have got oil up again. Brent up 1.4% at $109 a barrel, 109.57 as things stand. The weakness will be, the futures indicate, out of Paris. The CAC 40 only flat to the upside. The DAX up 0.3%. And that's about the same sort of move that we're seeing on the other side of the pond. Futures up about 0.3% on S&P E-minis and NASDAQ futures as well.
Frankly, there's a lack of conviction in these markets right now. And who can blame investors leading up to the weekend when anything can happen when it comes to the Middle East? To your point, across the futures picture, just gains of just shy of 0.2% for Europe is what's being flagged. The tech story is really interesting, Lizzy. Yesterday, Tech did not help in terms of providing any ballast. You saw some pretty pronounced sell-offs, particularly when it comes to Meta. Meta closed lower by almost 8%. Part of that was down to this finding, this ruling in a pretty monumental historic case, finding that they were liable, alongside Alphabet, the parent company of Google, of course, for the mental crisis harm caused to a young individual as a result of their platforms, and particularly how their platforms were designed. And the bigger picture is they could face additional legal suits, not just from individuals, but from states as well. That happened, but also a lack of conviction around what's happening in hardware. There was the focus on the chip makers, and particularly the memory chip makers, so they were under pressure. ASML in Europe was one of the biggest losers as well, so tech was one of the biggest losers as a sector for Europe yesterday, and then you saw that in the US session. So we'll see if that reverses to any extent today. I'm going to certainly have an eye on what's happening in tech.
Yeah, if we take a look at the US, okay, so up 0.3%, as I say, for both S&P E-minis and NASDAQ futures, really latching on to what President Trump is saying here when it comes to the geopolitics. But as you say, a lot of headlines come out at the weekend. This is a picture that could whipsaw throughout the day as we get closer to the Wall Street Open. We're waiting for that G7 foreign minister's arrival. Marco Rubio, Secretary of State of the US, should be arriving any moment now. And it was interesting to hear from Ollie there how much this could impact the Ukraine conflict, how willing G7 members are to support the US in the Middle East.
And the effort by the Europeans to refocus US attention on Russia as the adversary, pointing out, Kallas pointing out that the Russians now, according to Western intelligence, are supplying hardware and intelligence to the Iranians, as Kallas put it, to ultimately try to harm American troops. They are trying to refocus that. Whether or not the Trump administration bites is looking doubtful, given what we've heard from Trump recently. But certainly that's the focus, it seems, for European members of that grouping. Currently, European futures pointing up by 0.2%, US futures, S&P E-minis up by 0.3%.
Well, we're 5 minutes away from the market open. Don't go anywhere. We'll bring you the opening trade up next. This is Bloomberg.
Happy Friday, everyone. So a few minutes to go until the opening trade this Friday. Let's sort of reflect briefly on the session yesterday. This is where Europe closed lower. The Stock's 600 by a little over 1%. Then this is the session with the S&P 500. And as you can see, the grind lower, ending lower by 1.7%. Mixed messages coming from the Iranians, coming from the Trump administration in terms of this conflict. And of course, ultimately, President Trump coming out and saying he was been kicking the can down the road in terms of these threatened attacks on Iranian energy to April the 6th. Whether or not that's positive for the markets or just further uncertainty is a question in terms of where you sit on that debate. European futures are pointing modestly higher then after the selling pressure that we saw yesterday, pointing higher by 0.2% across the benchmark. FTSE 100 futures looking to add 38 points as things stand. Energy was the sector that outperformed yesterday. Tech was under pressure, as was basic resources. We'll see how that changes in the session today. DAX futures in Germany pointing higher by 80 points, up 0.3%. Lizzy, what are you looking at?
I'm watching some of the individual stocks this morning. Pernod-Ricard for a Friday, on the back of a Bloomberg scoop that it and Brown-Forman, the owner of Jack Daniels, of course, are looking at a merger to consolidate their companies because of the backdrop being an industry downturn. So this was a Bloomberg scoop, but in separate but similar statements, they did say that they are in talks to combine. More M&A news coming from Novartis. It's agreed to acquire biotech firm Excellergy for as much as $2 billion. So watch them as well. And then Santander out with earnings, saying they had a strong start to the year, growth in customers and revenue, and backing their targets despite the global economic uncertainty, Tom.
Oil started the session a little weaker, at least started the morning a little weaker. That has changed. So Brent is up 1.3%. The open is right now, as we look at the equity markets and, of course, the linkages to the oil story. So up 0.4% on the FTSE 100, and we'll see to what extent the energy sector plays that role in terms of supporting the broader UK benchmark in the session today. Across the headline Stock 600, you're seeing very, very modest gains, just a couple of points right now. We're waiting for the DAX and the CAC current to open as well. Geopolitics, of course, remains in focus with the war in the Middle East, but also the meeting of the G7 foreign ministers in France. The CAC current up 0.1%. The DAX is currently a little negative, currently flatlining on the German index. The IBEX over in Spain up 0.3%. 0.1%. But again, there doesn't seem to be a significant amount of conviction. Yes, the sentiment has turned from the negativity of yesterday, but you're only gaining across the benchmark just shy of 0.1%. Given what could happen over the weekend, of course, when it comes to Iran, the decision-making of the Trump administration, maybe it's not a surprise that there isn't significant conviction across these markets, at least for now, Lizzie.
Well, it's very strange when I'm looking at the sectoral breakdown today. I'll start by saying that you've got half of sectors in positive territory, half in negative. Basic resources leading the gains, up 0.5%. But you'd flagged energy, Tom, because we have got Brent past $109 a barrel now, up more than 1%. And yet energy is the 17th out of 20 sectors. It's one of the worst performers this morning, down 0.3%, which is strange, right? And we look at that breakdown geographically across the continent. The FTSE is outperforming. It's up 0.5% compared to the Stock 600, as you say, up 0.1%. So I want to dive into some of the individual energy names, but Total, BP and Shell, indeed, all in the red this morning. Some of the individual stocks that I had said we should be watching: Pernod-Ricard up 2.9%, Novartis, more M&A there, up 0.25%. And so interesting moves there following the broader risk on move, but with some individual idiosyncratic stories for those stocks to watch.
Let's bring you live pictures right now from just outside Paris, a couple of clicks outside Paris, where G7 foreign ministers are meeting right now. Marco Rubio, of course, landing in early morning, around 2 a.m., according to Oliver Crook, who's on the ground. You can see that live picture right now. G7 ministers, of course, meeting. There's Marco Rubio with the bright red tie, of course, alongside his counterparts from the UK, France, Germany, Canada, of course. There the camera is pushing in to Marco Rubio. And so that is the focus, of course, in terms of how those conversations evolve, with the Secretary of State of the US, no doubt bringing a message that is going to try to convince those members to join US efforts to try to contain Iran. We know that the US is unhappy that NATO members and EU allies haven't done more, as they see it, to support the US in that conflict. But we know the Europeans as well have their focus on Ukraine, Lizzie.
Yes, indeed. Well, let's get further market analysis now. We have Fabiana Fedeli joining us from M&G Investments. She is, of course, Equities and Multi-Asset CIO. Fabiana, taking in the geopolitics and looking at how markets are performing into the weekend. I know you tend to advise looking through geopolitics, but is this war an exception?
It is different from the geopolitics that we've seen in the past, Lizzie. In the last 2 years, we've seen geopolitics that didn't really have an impact on either credit conditions or earnings. And those are the two transmission mechanisms on risk markets, whether it's credits or equities. Now, there is a powerful transmission mechanism, and that's energy prices. So the longer this conflict lasts, and also the more the damage to the energy facility, obviously, the more impactful that transmission mechanism is going to be.
And so when you look at the equity picture so far, has it been complacent or is it resilient?
So that is very interesting. I think this market has actually told us what we already knew from the past 2 years, which is that the playbook of the risk, the flight from risk to safety and the traditional safe havens are just not working anymore. I would say that equities have been calm given the situation. I would also say that that flight to the US dollar, yes, we've seen the US dollar, the typical safe haven, up, 2.4% versus currencies globally. That's not a lot if you consider what is happening in the world right now. And it's only up 3% and a little bit versus emerging market currencies. Emerging markets would have been the typical beta trade in a situation like this. So that playbook where yields are going down because of the flight to safety, it's simply not working anymore. And investors are looking more for diversification as their best way to keep their portfolios resilient.
How does that story evolve if we got one of two extreme different scenarios? One, there's an agreement between the two sides before April the 6th. Two, you see actually members of the US military on the ground in Iran. How would that change your thinking, those two potential outcomes?
Well, that is really the issue here, that we don't know what those outcomes are going to be, and it's so binary, right? At some point, this conflict is going to end. but we don't know when. We don't know with what level of damage. So it is very difficult right now taking a position on the market only based on oil prices. You need to go one step beyond that. You need to still think about the longer term themes that you believe will continue to be valid after this end. And so think about this. Energy security is coming to the fore. It's really important. The G7 are getting together. That is going to be a big part of what they're going to talk about. Think about infrastructure. There's a lot of rebuild and also resiliency that has to be put into that infrastructure. And think about innovation. Companies are finding their markets being completely fragmented. And so innovation is going to help them to have more pricing power.
Where else are you finding balance sheet resilience in this environment?
You know, the interesting thing is if you look at the overall indices, the volatility has been quite limited given what is happening. But when you look at under those indices, you look at the stocks within different sectors, the dispersion in price behavior has been significant. Think about sectors such as technology, but also in consumer, in industrials. And you've seen also sectors that are not behaving as you would expect, such as, for example, the energy sector as of late. So there is a lot of balance sheet resiliency, but it's really, and again, we talked about this in the past, is stock by stock, security by security exercise.
I just want to come back to the dollar because Hugh Gimbo was on earlier, and he didn't say this on air, but it is in his notes, that investors will prefer to deploy capital in their home markets the longer this goes on, which would then weaken the dollar. So do you believe that? And ultimately, does that mean that the war becomes a sell America story?
Look, I'm not sure if it is a on-market bias, but we've seen, for example, from European investors that they're far more willing to invest in Europe and away from the U.S. than they were in the past. So they've come from very overweight positions in the U.S. to a much more diversified portfolio when it comes to risk assets. And I'm not really seeing that change.
I want to get your take on what's happening in the credit markets, because there is a link, obviously, in terms of what we're seeing on the geopolitical side, yields higher, repricing across the curve, and how that is reflecting across credit markets as well, at a time when we already have that AI software disruption. How concerned are you about what's happening in private credit? Is it a systemic risk? How close are you watching that?
So we're concerned. We're watching it very closely. It doesn't appear to be a systemic risk now, as of now. But clearly, some of the volatility you've seen on the credit side, also in public markets, is probably due as much to what is happening in the private credit market as much as to the war. And so we need to really make sure that when we invest, we know what we're investing in, because not every security out there is the same.
But are you worried about contagion to European banks? Because many guests will argue that we're less exposed here than in the US.
We're definitely less exposed. And there are other factors that are coming in. I mean, one of the things that we've been looking at as of late has been the impact of savings that for some banks have come from the implementation of artificial intelligence on their costs. I mean, there's so much more that is happening to banks also in Europe that can offset a limited contagion from the credit side. It's all a matter of relative impact.
What assumptions are you making about central bank reaction function? The assessment seemed to be very broadly from Fed speakers and the ECB yesterday were on hold. And the BOE voices that we heard from seem to be suggesting that maybe the markets were overpricing the number of hikes.
But just a week after they were sounding oh so hawkish on both sides of the Atlantic.
So how do we think about the central bank reaction function? Are markets accurately pricing right now how central banks react to this?
I think they're actually pricing the fact that even central bankers don't know what's going to happen. Because it all depends on the oil price, energy price, gas prices. And we still don't know how far this is going to go in terms of the damage to the facilities, in terms of the duration of the war. But right now we're at a time of uncertainty, both on the side of central banks and obviously investors. And that's why we say do not take directional trades based only on where oil prices are going to go, because the conflict could end tomorrow or could last much longer.
Appreciate the honesty, Fabiana. Brent at 109.30, up 1.2%. Fabiana Fedeli, Equities, Multi-Asset and Sustainability CIO over at M&G Investments. Always a pleasure to have you with us.
Let's bring you some breaking lines right now. It's a red head across the Bloomberg terminal. China starting retaliatory trade probes against the US. We've forgotten, of course, trade very much has been put to the sidelines, but shouldn't have been, arguably. The focus, of course, rightly so, on what's happening in the Middle East. But trade has been a theme, of course, over the last, well, since President Trump took office, and continues to be there. And this is a reminder that this story is not going away. So China starting a retaliatory trade probe against the US. This is in retaliation to the US 301, Section 301 probes, according to China. China saying it strongly opposes those 301 probes. It can take corresponding measures depending on the probe/investigation. So this is a reminder that China is looking to ensure it has the tools in place and a bit of leverage, arguably, as well, ahead of that meeting between President Xi and President Trump in May.
Well, we've got the MSCI Asia Pacific Index down 0.5%. In fact, we've got the Hang Seng Index up 0.4% and the CSI 300 up 0.6%. But taking our focus back to Europe, let's just check in on the Core 6 on this Friday morning, shall we? 8:11 a.m. here in London. And we have Nestlé, the only member of our Core 6, eking out gains this morning, up 0.3%. But losses here for LVMH, Novo's losses pronounced here, down 2.5%. But in the red as well for Rheinmetall, ASML and Schneider Electric. But let's get a check on some of the other individual stocks on the move this morning with Louise Moon. Louise.
Starting off with Pernod-Ricard, shares into the green. This is after talks that they might merge with US liquor giant Brown-Forman. Now, this is kind of echoing the moves that we saw in Brown-Forman in late trading in the US last night. Their shares also rose on the back of this potential deal, so showing that shareholders are welcoming this as they're both trying to strengthen their businesses against a weaker consumer, particularly for the alcohol space. So shares up almost 4% into the green on the back of that. AstraZeneca seeing similar moves, also up over 3%, almost 4%. That's after one of their drugs for a deadly lung disease, saying that this reduces flare-ups. Now, this again is them moving into new spaces, trying to kind of bolster themselves. And this drug in particular is projected to have huge revenue. So good news for AstraZeneca. Shares ticking up higher into the green as a result of that. Next, we're moving to Poland. Polska, the supermarket operator, shares plunging down into the red, over 15% lower. That's after their earnings, showing that costs are higher, guidance is seen as negative, a record low margin. So really dragging down their share price this morning as it opens. And then finally, moving to Rio Tinto here in London, the huge mining company Rio Tinto, only slightly into the green. That's after they've been raised to an outperform at Macquarie. And this would imply Macquarie's new price would imply about a 10% higher than their last closing price, but only slightly taking them higher into the green. So we'll be keeping an eye on that to see if that moves further upwards today.
Louise Moon, thank you very much indeed on Stocks on the Move this Friday. Coming up, a turbulent month, of course, for oil traders, to say the least, as the Iran war drags on. We're going to take a closer look at the outlook. Macquarie saying you could get to $200 a barrel, a record, if this conflict continues into June. We're going to get the latest from the Middle East. This is Bloomberg.
As I walked into the Bloomberg building this morning, futures were in the red. You've just told me futures are in the green. You're getting whipped around on truths, on tweets, on these kind of news flow, which, with the best will in the world, none of us can predict at all. So I think a lot of it is about trying to square the position and just being very, very humble around the things that we don't know at the moment.
You cannot invest for tomorrow or the next day at the moment. As we look forward, we think there are tremendous opportunities caused by the volatility, the dispersion that's building both through geopolitics, through economic concerns as well.
The recent developments just showed that Europe is a bit more fragile and vulnerable. But overall, if we have de-escalation, that is positive for the risk on.
We're likely going to move to a lower intensity war that will mean that Iran will continue to disrupt the region with occasional drones, with disruption in the Strait of Hormuz. That means we're not going to go back to a time where the strait was fully open. So I think we have to assume the base case is ongoing disruption.
Keep your strategic vision and don't get dragged into the short-term movements, because as we've seen from yesterday to today, it's just massive swings. Stick to your guns, don't get dragged in.
All right, some of our guests this week weighing in on, of course, what was another volatile period in markets. Let's check in the markets right now. We've seen volatility again. We were leading up to this session with futures pointing higher by 0.2. Right now, European stocks across the benchmark are down 0.3%. As you can see, the FTSE 100 is holding its head just above the water, though, up 0.1%, helped by what's happening in the energy space. The DAX over in Germany is down 0.5%. That's where the biggest losses are coming through across the region right now. Over in France, the CAC 40 is down 13, almost 14 points. We're seeing a bond sell-off as well. It's not dramatic, but it is there. There had been some drama in JGBs, and you're seeing that reflected to some extent in the sovereign debt of the Eurozone and gilts in the UK. Yields are up 5 basis points across the curve, Lizzy.
Well, one stock that's managing to gain this morning is Pernod-Ricard, up more than 3%. Pernod and Brown-Forman, the owner of Jack Daniel's whiskey, of course, have confirmed that they are in merger talks. In a statement, Pernod said that the partnership would be akin to a merger of equals, and Bloomberg understands that the transaction being discussed has a significant stock component. So let's get more detail now with Manuel Baigorri, Bloomberg's deals reporter. Hi, Manuel. So just talk us through what we know about this potential acquisition.
Yes, Lizzy, what a fascinating transaction here. We've been following both companies separately over the years. Pernod-Ricard has been quite active on the acquisition front, buying different brands globally. Brown-Forman has been, talked about a potential takeover target for years as well. And now, finally, it sounds like they are opening to talks for a merger, a combination with Pernod-Ricard. So fascinating, and definitely remains to be seen how it's going to play out. There is, as you said, an important stock component being discussed between the two families behind the companies, and it will be important actually for Brown-Forman's family to have a say and a significant share of the combined entity to potentially pick up of any upside down the road, given that the company and not just the company but the whole industry is going through a lot of setbacks and a very, very subdued demand, weak demand globally amid different shifts in consumption these days.
And Manuel, Pernod-Ricard, as you would know, of course, one of the largest drinks companies in Europe. And looking at its portfolio, it includes Absolute Vodka, Havana Club Rum, Jameson Whiskey. I wouldn't necessarily recommend mixing all of those even on a Friday. With this acquisition, Manuel, how big does this company become?
Yeah, it will be very transformative, definitely, adding to all the rapport of brands, Tom, that you were mentioning. So for sure, yeah, just Jack Daniel's to mention one, but there is other very iconic brands across different categories behind Brown-Forman, and it will be a very transformative transaction, one of the biggest in this, alcoholic beverages space for sure. That will obviously respond to the trends that we are seeing and the challenges that this industry has been facing for quite a while as different trends in consumption evolve. So this is poised to be one of the largest transactions globally this year, definitely within the sector. And interestingly, we've seen quite a number of big deals in consumer, broadly speaking, as well.
OK, Bloomberg's deals reporter Manuel Baigorri. Manuel, thank you very much indeed for the details on that merger. Now to the oil space. Almost a month into that deepening conflict, of course, in the Middle East, oil traders continue to reel from weeks of massive market swings, beginning to pull back, creating a drain on liquidity that threatens to exacerbate future moves. More, let's bring in Anthony De Paula, Bloomberg's Middle East energy markets reporter in Dubai. Anthony, always appreciate your time and your insights. We're looking at oil prices higher again. Brent closing in on $110 a barrel. What underpins this, given that Trump has pushed this deadline back, this apparent deadline, until April the 6th?
Yeah, good morning, Tom and Lizzy. The deadline is pushed back, but the bottom line is we still don't have oil coming out of the Persian Gulf. So we are seeing that oil price tick back up. Again, this morning we were a little bit lower yesterday, opened higher today, and it's come back up as well because we're simply not getting the supplies that the market needs in the quantity that it needs. So we've seen some vessels coming out of the Gulf carrying Iranian oil. Some vessels that the Iranians have said that they've let go through. Some ships are paying a fee, like a toll, to get through the Strait of Hormuz. And we even heard President Trump talking earlier this week about a gift that the Iranians had given the U.S. apparently that was allowing some additional tankers to pass through. But when you think about the context of the global oil market, if you're relying on gifts from Iran to allow vessels to pass through the Strait of Hormuz, which had previously been an open channel for navigation, then you're already in a more negative situation than you were before, relying on one country to let through or not vessels onto the global market. So that's a problem. That's what the market is focused on. Plus, we've got this deadline delayed from earlier in the week. So let me tell you, those of us in Dubai were happy to see that deadline did not come to pass at the start of this week when Trump threatened to bomb power facilities, in Iran, and then the Iranians reciprocally threatened to bomb power and desalination here in the Gulf region. The UAE has been one of the countries that's been hit the most in terms of missiles and drones. So we're happy to see that not come to pass. That was delayed until the end of this week, now delayed again. So I think the market is kind of looking through that and looking at the placement of troops as well, the need to get the Hormuz open, Trump's comments about opening that also forcibly. So the market is potentially looking at some other action happening before we get to that deadline, and also take into account that the longer Hormuz stays closed, the more damage there is done to the oil market, Tom.
And so, Anthony, where Malaysia says that Iran has allowed some of its ships through the Strait of Hormuz, do we take that as a sign of de-escalation, or do we take it as a sign that Iran is tightening its grip on control of who goes through the strait?
Yeah, I think it's that. I think it's tightening the grip. It's obviously a conciliatory gesture, but it shows that Iran has a level of control in Hormuz that it didn't have, that it wasn't exercising before the war. So this is one bit of posturing by which Iran is trying to show that it's got a bit of an upper hand on that aspect, at least. Militarily, they are taking a beating, but they do have the global oil market by the throat by closing Hormuz. So potentially a de-escalatory move, but not enough really to help the market. And I think that the Gulf countries, we saw the UAE ambassador to the U.S. commenting in an op-ed yesterday. We saw the ADNOC CEO talking earlier this week, speaking to CERAWeek, as well as in some meetings in Washington, including with the vice president. They want Hormuz opened, and they want the situation in the Gulf really sorted out, not that the U.S. leaves the region and leaves it with an Iran that is able to exercise control over the Gulf or threaten energy facilities. The Gulf countries really want stability so that they can supply their oil and gas back into the market. That's where they make their money. They make their money by having a stable
Anthony,
environment.
we'll have to leave it there.
So
Anthony De Paula out of Dubai. We appreciate the update. Thank you very much. Coming up next, we'll talk tech. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session, and we told you that things could whipsaw this morning. It is a Friday. We started with the European futures picture in the green, but now red across the screen into the open. 30 minutes in, we've got the Stoxx 600 down 0.5%, as we've seen oil climbing above $110 a barrel on Brent and yields rising as well. Take a look as well at the US futures picture, because again, we had seen a positive picture in futures, and that's paired somewhat because of the Chinese Commerce Ministry saying that it's starting 2 probes into US trade. So the gains that we had seen, actually now futures pretty flat stateside, Tom.
I think the volume story tells a story as well. Currently down 30, close to 32% volumes versus that 20-day average. I think you're going to see investors staying on the sidelines to some extent leading up to the weekend because goodness knows what could happen in terms of the Middle East. Yes, President Trump has kicked that deadline, that self-imposed deadline to April the 6th. That just prolongs the uncertainty for many, at least. In terms of how it breaks down across the Stock 600 members, you have 122 stocks in positive territory this morning. The majority, of course, as you were saying, Lizzy, in negative territory. 465 stocks currently lower in the session so far. If we flip the board and have a look at terms of where the leaders are, there's some interesting idiosyncratic stories as well to flag. The laggards now the leaders. AstraZeneca, best performing in the Stock 600 so far this morning. Gains of close to 3%, as you can say, rising after news that its experimental drug for a deadly lung condition brought some statistically significant results. So Astra getting a lift on that. Pernod-Ricard, we're talking about this potential merger that's in the cards, up 3.3%, exploring a potential acquisition of Brown-Forman, which is the owner of Jack Daniel's whiskey. That could significantly expand, of course, its portfolio, already significant for Pernod-Ricard. SAP turning around after 3 consecutive days of losses. The software giant, of course, listed over in Germany, currently up 1.5%, is on the front foot, at least for now. In terms of the laggards, Siemens Energy, of course, a key piece of the data center story that's performed very well in the last 12 months or so on that build-out story. A different picture today, dropping 4%. Morgan Stanley analysts citing the exposure to the Middle East as a potential risk for Siemens Energy, and you can see that drop. And a significant drop for Dino Polska, down almost 15% after results showed record low margins and negative guidance. And Nokia on the telecoms equipment space dropping after it was cut to underperform this morning by Santander. That stock down almost 4%, 3.6% right now. Lizzy.
Here's what else you need to know this morning, Tom. US Secretary of State Marco Rubio is meeting with G7 foreign ministers in France today for talks on the Iran war and Ukraine. Before leaving Washington, Rubio said that other countries should support the US push to reopen the Strait of Hormuz, saying it's in the G7's interests. Elsewhere, 3 Australian plants that provide about 8% of the world's liquefied natural gas have had their output curbed by a cyclone. The disruption will affect mostly Asian buyers and comes amid an energy crunch stemming from that closure of the Strait of Hormuz and an Iranian attack on the world's largest liquefaction plant in Qatar. And Bloomberg understands that Anthropic is considering going public as soon as October. Sources say the maker of the popular Claude chatbot has held early discussions with Wall Street banks about taking leading roles on a potential listing. Anthropic has been boosted by a winning court, with a judge blocking a Trump administration ban on government use of its AI technology. Tom.
Let's stay on technology because Meta's stock tumbled yesterday, almost 8%, after the Facebook parent company was found liable in a social media addiction trial. That on a day when a Bloomberg gauge of Mag 7 stocks had its worst day since October. We're going to get a take in terms of what's happening across social media companies, AI as well, the potential societal risks, and someone who has deep insights and experience. Let's bring in Dex Hunter-Torricke now, CEO of the Center for Tomorrow. He's also a former speechwriter and advisor to Mark Zuckerberg, Elon Musk and Google's Demis Hassabis, amongst others. Dex, good morning. Thank you for joining us.
Good to be here.
We think about Meta, we think about Alphabet and Google and being found liable in this case around media addiction. As a reminder that social media has had its problems before. This is before the advent of generative AI. Not before the advent of AI, but before the advent of generative AI. You've worked with the likes of Elon Musk. You've worked very closely in the pits with Mark Zuckerberg. You've worked very closely with Demis Hassabis. When we think about the potential societal risks, the impacts on jobs, the impacts of AI and the military, the impacts of AI on the environment, these guys have a plan, right, Dex?
No, they don't. I wish they did. Look, we're in a moment where I think most people would say, if you look at how social media and the last generation of technology was managed, did we do well? I think very few people would say yes, as today's news shows. With AI, you're looking at something that's vastly more challenging for all of those systems in our societies. It's going to be transformative for our economies. It is having very unpredictable effects already on the geopolitical order. You've got AI targeting systems being used in militaries in ways that are rapidly exceeding our capacity to manage conflicts as human decision makers as our international systems have broken down. Climate change is something that's just accelerating, and as we turbocharge economies with AI, you're actually going to see even faster consumption of resources. So all these problems are just coming at leaders now from every direction, and I think people really are missing the interconnected thinking.
And to be absolutely clear, I mean, you've been in the room with Elon, with Mark Zuckerberg, with Elon Musk, with Demis Hassabis at SpaceX. When you put those concerns to these tech CEOs, who, whatever you think of them, are incredibly smart individuals, intellectually bright, intellectually on the edge. What do they say? How do they respond? Are they thinking about these issues, Dex?
Well, I mean, people are pattern recognition machines just like AIs are. They look at things, in the way they've unfolded, throughout our history, and they cling, to those patterns, and hopefully they will guide us through the future. And people often think about the moment we're going through and say, it's just like the Industrial Revolution. People worried about jobs, people worried about the future. We ended up having, lots of new jobs. We had very, very different societies where we solved a bunch of our problems. This is not like that. This is not the arrival of steam power. You've got a bunch of leaders who are fantastic at developing those technologies, at racing for new innovations. They don't understand how deeply frail our societies are. In many ways, it's not their job to fix those things, but now we really need a lot of other leaders, a lot of other voices to step up and solve those problems.
So is that the government's job, then? If you've got an AI-saturated economy, people losing their jobs, we were discussing this earlier in the programme, do we need a universal basic income?
This is the sort of thinking that might be part of the solutions we need. Currently, UBI proposals are mostly fanciful. They are mostly fringe, developed by, thinkers who haven't really figured out how to actually, afford these things, especially when the effects of AI will arrive for societies all over the world. We're looking at a moment coming very, very quickly over the next decade where increasingly advanced AI is really going to have a huge displacing effect on a lot of traditional jobs. And we might get new jobs, but that means we need to transform all of our education systems, the way we are equipping young people with skills. At the moment, we're looking at unemployment in the UK for young people, soaring to, one of the highest numbers it's been in a long time. That's just a taste of the path we might be on if we don't fundamentally rethink a bunch of those assumptions that give us future growth.
Well, because some proponents of UBI would say just tax big tech more. Surely that would just drive big tech away when you need that economic growth that they provide.
Well, this is the point, right? There's a very small number of companies now which are achieving an unprecedented concentration of economic and political power. And what you've seen over the last year, right, is some of those Silicon Valley firms being utterly intertwined with government, with the US administration. Nvidia's at, a $5 trillion valuation. That's bigger than the GDP of 170 nations plus. And the idea that you're going to restrain them, you're going to be able to tax them in that way in a decade to actually power UBI systems for the whole world's nations, I think that's fanciful unless you have really put thought into what does a fundamentally different economic model look like.
We touched on, and you touched on the fact that the here and now, when it comes to the military conflict in Iran, is the use of AI, both by the US and its Israeli partners. We have seen some pushback to government aspirations from Anthropic and from Narendra Modi, a pretty monumental spat between the Department of Defense and Anthropic. Does that give you some comfort that corporate leaders at Anthropic are pushing back in terms of putting some limits around the use of this technology?
I'm going to say that I have the barest amount of comfort from that because Anthropic went into this thing eyes wide open. Did they discover, recently that the Trump administration has a fundamentally different revanchist, worldview and international agenda? No. They knew what they were doing when they signed those contracts. They then asked for very, very minor changes, in how those contracts, ultimately applied. And look, that's a very, very small sign of progress. But, ultimately, you have all the other firms pretty much, hundreds of billions of dollars being plowed into applying next generation intelligence systems to the largest military rearmament in history. And in a world order, in the way that we are today, with ballistic missiles raining across the Middle East, militaries all over the region using AI systems right now to target enemy population centers, this looks unlikely to be heading for a constructive outcome.
Do you think the European political leaders understand the realities of warfare in an age of AI?
I think European leaders understand it, but have yet to come up with an agenda for actually how to fundamentally deal themselves back into the game and prepare for that world. This is the same moment of peril for all the middle powers. When Mark Carney was speaking at Davos and he talked about a fundamental rupture in the international order, that is something that has absolutely illuminated, thinking for leaders all over the world, not just in Europe. But how do we ensure that, in the next decade, as you arrive potentially at artificial general intelligence, commercial quantum, nuclear fusion, if the United States and China are managing the arrival of those technologies, how do we ensure that the middle powers have a seat at the table? Mark Carney said, if you don't have a seat at the table, you're on the menu. And this is the challenge for all leaders now, to figure out how we are not on the menu.
So, Dex, you've started the Centre for Tomorrow. You're out of tech after what, 2-decade career,
yeah.
right at the pinnacle, and you've started the Centre for Tomorrow. What are the objectives? What are you hoping to achieve?
Fundamentally, I think now we need a dramatically different set of solutions to solve the societal problems arising from that next generation set of technologies. If we think about these problems as mostly technical with technical solutions, then we're going to fail, because I want to know, where are jobs coming from in a decade? How do we ensure that we stop climate change? How do we ensure that the race for these new technologies simply doesn't push us faster into a catastrophic conflict? And these are questions you're not going to find in simply managing the technology. They are fundamentally choices about what kind of world do we want to live in, what kind of lives do we want our children to have. And that's a much larger mainstream conversation we need to have now with publics, with serious decision makers across society. These are choices that cannot be left up to a handful of billionaires in Silicon Valley.
Dex, thank you very much indeed. Dex Hunter-Torricke, founder and president of Centre for Tomorrow, on some of the risks involved around the rollout, the implementation, of course, the use of AI, and possibly some of the solutions as well to take the edge of some of the potential downside coming through as a result of that technology. Lizzy.
I just want to check back in on these markets, Tom, because we have seen some dramatic whipsawing this Friday morning since the start of trade. In Europe, we've turned negative, and stateside, where we had seen futures positive, now they're flat, and Nasdaq futures actually in the red. This partly on headlines indicating a further deterioration in US-China trade relations, that Section 301 investigation, two of them, the Chinese Ministry of Commerce starting 2 trade investigations against the US, responding to that Section 301 probe by the United States. So that's potentially what's weighing stateside. But more broadly, of course, we have got oil higher, Brent now nearly at $110 a barrel, yields higher across the curve, across the continent, and that weighing here in Europe. Coming up, US Secretary of State Marco Rubio arrives in France for G7 talks, with the Iran conflict and Ukraine war top of the agenda. We'll bring you the latest lines from those discussions next. That's next. This is Bloomberg. Russian intelligence is helping Iran target Americans and US allies. This according to the EU's Foreign Affairs Chief, Kaja Kallas. Speaking to Bloomberg at the G7 foreign ministers meeting ahead of the arrival of Marco Rubio, Ms. Kallas called on the US to help Ukraine by stopping Moscow from supporting Iran.
Clearly, these two crises, two wars are linked. If you hear about the intelligence that the Russians are providing to Iran so that they could attack Americans. So, the response of the Americans should also be not to help Russia. And there it is important that the oil price is capped and they don't have the funding to actually go on.
And do you think those reports about that intelligence sharing and potentially drone deliveries we're talking about potentially to Iran from the Russians, does that make the sort of battle lines a lot clearer for the United States, and does that then put the United States on the European side of those lines?
Well, it's very clear for us where the lines are, and clearly, Russia is not on the side of Americans. That's very clear. So there should also be pressure on the Russians because they are providing drones, but also intelligence.
And also thinking about the war in Ukraine, the end game there, we're now approaching basically a financing cliff for the Ukrainians. The 90 billion euro loan still remains blocked. We have reporting now that some of the hardware from the United States is being diverted potentially away from Ukraine towards the Middle East. How do you see things progressing? Are we not just basically stuck in deadlock here for the Europeans? What is going to advance this story for Ukraine?
Yes, definitely the 90 billion loan that we agreed in December has to be delivered to Ukraine. They desperately need it, and it's also the question of European credibility. So the work is ongoing there. Hopefully still we have solutions and also working on the plan Bs on this. But what is important is that so the weapons that Ukraine needs to defend themselves, that they still have, because the war is very brutal.
And there's been some reporting that maybe some actually the European money that's been paid to buy the weapons through the Pearl program could be rerouted. Is there a reaction from Europe from that if the European money is being used for weapons that are now being sent to the Middle East?
I'm not aware of that.
And then also thinking about Ukraine and the Hungarians and the role, we've had some reporting recently about the foreign minister effectively briefing the Kremlin from some of the meetings that are being held in Brussels. Do you believe that that is the case? Is that appropriate? I think I know your answer to that. And what can you do about it?
Yeah. Clearly it's not appropriate. I mean, secret discussions or closed discussions should remain closed discussions. And there is also the obligation of professional secrecy. So I've reached out also to the Foreign Minister of Hungary to have discussion about this. And I've also reached out to the Secretariat of European Council to see what are the gaps in our rules of procedure to cover these kind of cases.
EU representative for Foreign Affairs, Kallas, speaking to Bloomberg's Oliver Crook, of course, who is at the G7. Let's bring Ollie in at this point. At the talks, of course, in Vaux-de-Cernay, just south of Paris. Ollie, US Secretary of State Marco Rubio now in France. You told us earlier he landed, what, at 2 a.m. or something? What is the message? What does the US want from its allies, from its G7 partners, in terms of support for this conflict that they started against Iran?
Yeah, I mean, I think that is the question for many of the foreign ministers here, because we've heard a lot of sort of ideas articulated by the President of the United States saying that NATO is sort of a disappointment, that a number of G7 allies are a disappointment, but they haven't articulated necessarily very specifically in clear terms what they want from those allies. So Marco Rubio is now currently in this room just here behind me with a number of foreign ministers of the G7, including, we'll say also with an incredible note on this trip, which is the Saudi foreign minister, also of Brazil and India, all having discussions today. And I think for those allies, it is to get an idea, a clear idea, and a sort of articulated, concrete idea of what the allies can do to help the United States, but then also what their view is on the war in Ukraine. For the Europeans, that is, of course, front and center, as you were hearing there from Kallas, whom we spoke to yesterday, trying to link these two wars with the reports of the Russians delivering intelligence and potentially drones to the Iranians, and really saying that these really makes a clear delineation of where the battle lines are. So for Marco Rubio, it is going to be trying to enlist some of these Europeans, these G7 countries, to try to help in some way on the Straits of Hormuz. We should say that yesterday we heard from the Secretary General of NATO, Mark Rutte, saying that there is a coalition emerging of 30-plus countries, a coalition of the willing to try to aid some of the passage of naval vessels in the Straits of Hormuz. But the real question is, at what point are those nations willing to help, and in what capacity? The people I've spoken to here are not willing to join a sort of kinetic, active military operation. We've heard from Emmanuel Macron that these are more sort of the day after plannings, but those are some of the conversations that are happening right behind me as we speak.
Yeah, if those G7 ministers do not want to help when it comes to the US in Iran, then what happens to Ukraine?
Well, that's the big question. And I think that what's interesting is that the Europeans are trying to link the war in Iran to the war in Ukraine, but the Americans are trying to link it in the other direction. We heard from President Trump yesterday out on Truth Social saying NATO nations have done absolutely nothing to help with the lunatic nation now militarily decimated of Iran. The USA needs nothing from NATO, but never forget this very important moment in time. So for the Europeans who have said this is not our war, this is a time for the United States to say that Ukraine is not our war. And in fact, that is exactly what Marco Rubio, the U.S. Secretary of State, said last night as he was boarding the plane in Washington, D.C., saying that a couple of leaders in Europe who said that this was not Europe's war, well, Ukraine is not America's war, and yet we've contributed more to that fight than any other country in the world. So it'll be something to examine that the president will have to take into account down the road. So again, for the Europeans, it's trying to link Iran and Ukraine and the Russians, and for the Americans, the same sort of thing. The real question is, at what point will European nations, will the G7 be willing to be involved involved in trying to open up the Straits of Hormuz. From all the conversations I've had here today, that is a day after, and we're still very much in the day of.
Okay. Oliver Crook, our Chief Europe correspondent in France for that meeting. Thank you very much for the context.
OK, let's check back in on the markets, with European markets now off by 0.8%. US futures also negative right now. Flatlining on the S&P E-minis, Nasdaq 100 after a brutal day yesterday, currently down 0.1%. I say brutal, it was down a little over 2% by the end of the close. That's the context. Let's bring in Adam Linton for more context now from our Bloomberg Markets Live team. Adam, we're seeing a sell-off in bonds, yields are up, sell-off in equities again. Futures have pointed higher. That is not the story that we're seeing in the session today, and US futures currently pointing lower. What is your assessment of how markets are trying to get to grips with this new deadline that President Trump has imposed and the potential risks over the weekend?
Yeah, definitely. So I think, we did see upside in stocks initially, when I walked in the office, but it definitely did look out of place with the price action we've seen in the bonds markets. We've kind of seen those brought a bit more into line now. But as you mentioned, there was that deadline extension, which at first glance is a positive for the market. But ultimately, whilst there may not be any near-term attacks on energy infrastructure, it doesn't do anything to get the Strait of Hormuz open. If anything, it potentially defers that. And then concerningly, we saw from Trump, that the Strait of Hormuz doesn't even matter to the US. Saw him reiterate that. And whilst this deadline does allow scope for talks, we've seen how far both sides are apart this week. Iran wants reparations, wants control of the Strait of Hormuz. And then at the same time, you've seen the US amassing troops in the Middle East, and reports of more troops. And then you've also seen Israel this morning continue to attack Iran. So, there's still not really lots of positives to the markets to trade off, despite that headline yesterday. And at the moment, we're just kind of following the trading patterns that we've seen throughout the conflict. People don't want to be taken on risk heading into the weekend. Neither the Stock 600 or the S&P 500 have closed higher on a Friday into the conflict. And throughout the conflicts, we've seen a lot of escalation over the weekends. So it makes sense for traders to be taking down risk ahead of that.
And Adam, I'm looking at the Spanish CPI numbers that came out at the top of the hour. Actually lower than expectations for March, both year on year and month on month. Where does it leave the outlook for the ECB? We've had lots of ECB speak this week. We've talked about the comments from Lagarde to the Economist. Are markets pricing about right when it comes to their outlook, do you think?
I think there's still just so much uncertainty. So yes, this Spanish inflation release is of note, but it's early days. And then for Spain specifically, there's a huge caveat because they've got this absolutely massive support package of about 5 billion euros, which Bloomberg Economics estimates it could shape about 1 percentage points of inflation in 2026. If you compare that to France and Germany, which are expected to take much more targeted approaches, then Spain is ultimately a bit of an outlier. So we'll see what the full Eurozone-wide release says on Tuesday. But again, it is very much early days at this stage. And we saw from Lagarde early in the week, they want sufficient information before they take action. And we actually get another inflation report just hours before that April decision. So in terms of what we'll actually learn from how the data is shaping up and what the ECB reaction function will be, this next week probably won't provide too much more colour beyond what we already have.
OK. Adam Linton from the Bloomberg Markets Live team, thank you very much for that update. Well, Tom, we're nearly at the weekend.
The weekend. Let's tell you what's on the agenda then for the weekend, as you maybe look for some time to kick back and relax. It's NCAA March Madness. That continues stateside. Also in the US, the Miami Open Finals. That would be good to watch. F1 Japanese Grand Prix is also happening, of course, in Japan. Some excitement on the track. And when it comes to what's happening with Disney Adventure World, opening in Paris. Lizzy's booking her flights or train trip there already. Also worth noting, daylight saving times, 2026.
Is that another hour in bed or less?
Less, 1 hour less.
Just what we want to hear. The opening trade.